Hello guys, glad to have you on board again. Today we'll just follow yesterday's plan and do the same today, which means in order to save me some time and some problems with the throat, I'll try to make this one a little bit quicker than the usual, which means we're just going to cover up what is changing and reliable today, and we're going to set aside all the pending or ongoing scenarios just to avoid repeating what we said already. So regarding the cryptocurrencies, not that much to say today, even though we have probably going to be a daily bearish engulfing structure, but we're still inside ranges. We've got nothing to fear. We're still not breaking weekly candles. We've been breaking the highs. We'll see if we can manage to break the lows. Eventually could give some kind of clue that the market is out of the compression phase. But just like as we done when I was forecasting the potential outcome for that daily compression, we might have a shorter time frame compression as well that may have the same outcome, which means after compression, lacking of a market catalyst to get dynamically out of the triangle, we're just going to have to create the X-cross structure, which means we'll build a triangle. We get to the apex, okay, we create the apex, and if the market fails to find a catalyst to break either bullish or bearish, then generally you have another phase that is the X-cross, which means out of the apex you're going to create divergent diagonals as well, okay, which means after building that triangle, we're just going to create an outside triangle. Okay, that is generally shaped the opposite. Okay, so divergent diagonals after convergent diagonals, which means when we reach the tipping point, we're going to exit that triangle. We're just going to probably break both highs and lows because we're going to expand volatility until the market finds a catalyst in which we're going to break out of that structure. But in order to trend, we need to have something to pay for. So the question is, if we go to the bullish trend, then why are we paying? So the market needs a reason. This is how it goes. When we do trade long-term chart like that, with daily to weekly time frames, they always have the need of a reason to do things, which means we're linked to fundamentals somehow. The market can anticipate those fundamentals, but yet we'll still need to give a reason for the market movements in order to make the headlines of journalist things or any blogs. So the reason may come afterwards. This is why we need to anticipate things, but we clearly have the desert crossing phase leading us to more volatility, and I think after a bearish phase, when you generally have that structure, I'm just going to teach you something today really important. That structure is very well unknown. You don't see this one into the charting schools or whatever shit this is, where they are trying to give you odds about exiting a triangle, exiting a bearish wedge. This is pure shit. This doesn't work, okay? You cannot trade with that. You can take that in consideration to trade. This is the technical framework part, but if you do just trade this, it's never ever going to work. Okay, you need to be aware of that. Anyway, that being set aside, this structure is the equivalent of another one that you can see on those charting schools. Is sorry about that. Is what we call the diamond structure. So the diamond is something that you can generally see. So I'm going to remind you what the diamond is in terms of charting schools. So generally we get a diamond. This is what you've got, meaning the price is entering by the bottom or the top. We've got expansion phase in which you're both breaking highs and lows, and then you got a compression phase, okay, meaning breaking highs and lows and then not breaking them, and then you generally got an upward opposite release, which means the market expands, compress, and exits by a reversal. And that pattern generally is a strong market top structure. Then you got exactly the same in here. That's the exact same structure. It's just got reversed. It starts with expansion and then gets to compression. Okay, so consider it that way. The market expands. The market compresses. Then the market expands, and then the market reverses, okay? This is how it goes. This is the exact same thing, just the steps have been reversed, but the outcome is generally the same. You goes from a bullish trend, you compress, then you expand, and then you release by a bearish trend, okay? That structure is strong bearish reversal as well. And from what you can see, I think this is what's about to happen here, but on the opposite side, as a bullish reversal. So the fact that we're compressing right now is a good sign. But if you were selling that structure in here, what I'm doing in here, you wouldn't have the best selling price. Obviously not. The best selling price will be there. So these prices, of course, I'll take them. This is why I haven't been putting the entire amount of money I want to buy in Bitcoins right now. I've just been setting half what I want to set. Half, 50% of the 10Ks I want to put out there. So I just bought 5K, what I've been clearly said yesterday. So 5K, and I spare some money for further buying because I know we're probably going to have better prices in the future. But I want to be in right now for yet a single reason that I hope you guys know from now. The uncertainty principle. You just don't know what the market will do. You project yourself on what seems to be the most probable to you. And whenever you have a decent risk-reward ratio and decent risk management to do so, you just take the trades and then you let the market makes the decision. And if it goes in the right side, you get to put reinforcement, you put some more money in, and if the market gets to your target, you take maximum gains. If the market is doing differently, you just remain cautious. If the market goes to invalidation steps, you just put the money out the table and assume that you've been wrong, and you take the loss without problems. All right, this is really what the job is. I hope that from now you've been seeing me doing this for months. I really hope you really got that. So if you still think right, wrong, you're still in the bullshitting side of trading, and I hope you'll get out of this one ASAP. So that compression phase probably is going to lead, if we don't find a market catalyst, to an expansion phase, and either way that structure generally leads to a reversal. So as we started by the bottom side, as we started with a bear trend, we should probably exit this with a bullish trend, and this is one of the many ways we can reverse that trend to the opposite side. All right? So that being said, no more than that to add to the cryptocurrency sector. We're just in the exact same structure as yesterday. So until the market finds a catalyst, either bullish or bearish, to confirm the breakouts of those triangle, if we do find a strong bearish catalyst breaking down that triangle, we can have an outburst to the 3K. That's a possibility, but you cannot trade, you cannot anticipate that. So you cannot profit from this until the catalyst is out. So if the catalyst is out, is strong enough to break down a triangle building from 4 months, then obviously I'm ready to eventually take some partial losses, take some money off the table. But for now, we have neither that catalyst, neither the bearish breakdown, so I have enough confidence that we're probably, what seems the most probable to me is for us to build that structure, meaning lacking of the market catalyst. And we also have that option, and we'll find a bullish catalyst and break up that triangle, and we don't go from that phase of expansion. This is also a possibility, and you need to be aware of that. So many possibilities. All you can do is not trying to play gamblers and trying to figure out what the market will do. You just have no fucking clue about what's going to happen. Many options, too many options. Only the fact is that right now the risk seems limited enough for a buy and hold entry, but with a limited leverage. All right. So that being said, if you do trade following what I'm doing, but using a different money management or anything like that, you're just totally wrong. So please, if you're blindly following someone, at least do it like he's doing, okay? So set aside other cryptocurrencies, just basically behave the same. We're trying to wake ourselves, so finding some expansions in the price actions or waiting for market catalyst to truly break either bearish or bullish on that triangle. So other asset classes, we're going to cover them pretty quickly. We're going to have a look at the Nasdaq yesterday, who's been managing to make a bullish candle close. We're looking at the cash structure, which is the most important. Remember that Wall Street is right inside the bubble, so the rest of the world is trading normally, but Wall Street doesn't give a shit about what happens elsewhere. They just give a shit about what happens in their places, and they want to remain as bullish as they can. Even though this has been creating many distortions, in a broad number of assets, all those distortions will probably terminate today, and what's been profiting from the US will probably cause them a lot of pain. But for now, the dynamic remains the same. Wall Street doesn't want to give a shit about anything else but being bullish. So obviously we're trading support area, so instantly the bears are taking partial profits, but as you can see the prices are not rising either. It's just we're kind of staying in there as long as we can, trying to hold those prices and see if we can manage not to lose more values into Wall Street capital, Wall Street market caps. So we'll see about that. To me, this market is mature enough to be in a fucking breaking bearish structure, so this is the reason why I remain bearish on Wall Street as long as I haven't been proven wrong, even if for this I need to surrender all the pending gains I have. I have pretty nice gains in that market right now, but why don't I take them off the table and take the gain? For the simple reason, once again, market uncertainty. If things turns out to be really red, I want to be in that game. I've been suffering the risk of anticipative short entry that missed the shot each and every time I tried it. Now that I've got a candidate that could be the right one, taking the profit will be really stupid. But this is what we already said yesterday, so I'm not going to go again in that argumentation. But as long as it is, right now, I think it remains bearish to me, and I have absolutely no envy to limit the market, so I just let it go to the downside. Of course, I've been taking 25% profit, and I stand on this, so nothing new at Wall Street. But yesterday seems to confirm what I felt, which means probably going to have another bullish day today, trying to retrace probably 50 to 61% of that first bearish impulse, and then we'll see if the bears are still holding that market. We've got a resistance in here, and that could be an interesting level to test today. So you not for that level. This clearly is a key level that you need to highlight. So in the cash market, let's say 7,510 points for the Nasdaq is an interesting price to try trading around today. So if you want to make intraday trading, you go for a 2-hour chart time frame and you wait for a potential bearish signal near that price area. I'll suggest you do that with the futures market that has more candles, so it's better in order to price cycles. So you just do at that level, okay, just making the comparison, making sure that we're right. Yes, it's exactly that price, so it's the price we've been trading at the open in October 5. So you go there, October 5 market top, this is where you want to trading. Okay, so you go there. If the prices are going there today, put yourself an alert in that area. I'm going to do as well. Okay, so that price area is something you can trade if you do have a bearish. You can see sine waves already bearish. So if for some reasons we go there, break up that cycle, you're going to have a target that is going to be, let's anticipate what sine wave will do. So as the lowest closes is there, it gives us, yes, so potentially higher retracement, probably going into that breakout level. So okay, so that's 7,600. We'll see if this is relating to something in the cash market. Yes, we do have a gap in here. Okay, so I would say if you want to trade Wall Street, putting any stop loss above that gap is great enough. We've got a bearish gap. As long as this gap is on, I think the market remains bearish. So we keep this. This is where I put my stop loss. This is near the entry prices I have, so probably is a stop break even right now, and we'll see how it goes. So let's say 7,600. Yes, this is an interesting price. It's going to test that gap again. So you know those two levels, and this is where we're going to try trading bearish. So these are the two levels probably Wall Street is going to try trading today. We'll see. This one probably going to be done today. This one really aggressive if you manage to do it, because it means rising 3% in a single day. So I don't think that's nearly possible in Wall Street, and despite the only possibilities for Apple to make a 5% day or something like that, but that's possible. But this is more likely. If for some reasons today we were to open at the highs, which Wall Street I think is going to try doing, and rising for 1% or something, just trying to retrace to those levels between today and tomorrow. So let's say until tomorrow Eve, I think we could just retrace 2% from the current close, trying to get ourselves as near those prices and testing that resistant area. So search for 2 hours bearish signal in that price area, or 7,600 with a stop loss above the gap. If the market makes it and closes the gap, game is over, means the market's not bearish, and that day once again made the fucking buy the dip situation. Alright, so aside from those, we're going to talk about the FTSE, because this is one we haven't talked about yet. We have talked about yesterday, so we've made a close not at the lows, but yet it triggers the breakout pattern, which with a target in here. So it's definitely highlighting the first target we've been talking about, and from what I can see right now, it's just doing pretty well. So I think it's a little bit too early to consider making the breakdown, as we've already been overselling the momentum. So for some reasons, as we are in support area, I already triggered the profit taking on that area, which means I'm not going to make another profit taking in here. I'll remain fully bearish leverage, but I expect the market to just range that area for a bit, and that's the breakdown of that range that I will trade with a bearish reinforcement and get maximum leverage on that asset. I'm already 4 on 5, which means I'm already leveraged on that asset, and in order to go 5 on 5, I'll wait for a range to build, and then I'll trade the breakdown to go maximum 5 on 5, which is probably going to be a leverage 2 or 3, or leverage 3, but no more than that. I mean, I'm not going to multiply those losses by 3, which is more than enough. Got an average price near there, which means if we go there with a leverage 3, I'm taking 30% gain on that asset, which is really, really a good scenario. And once again, just balance those things. Many of you guys are here to criticize, saying Phil is always wrong, he's taking a lot of losses. Those are speculative losses. When I do take those losses, they're generally 0.5%, and maximum goes to 2 or 3%, no more than that. This is the biggest loss I can take, and I don't take those 3% losses often. Generally, I take 0.5% loss, or generally even a break-even loss. Break-even invalidation, which is not a loss. I mean, basically, I lose nothing. I try the timing, it doesn't work. I'll try the next one. Okay, but when it goes right, and goes right all the way along, I take the reinforcements, the market goes to the target. When it just go perfectly, you can see how much I make. This is purely it. This is really what makes the difference when you speculate. I don't give a shit about how many times I can go wrong. All I care about is when I do right, and to take the most I can in those scenarios, to cover up all the tiny losses I could have had on going to that pattern, and when it terminates, I want to be there taking maximum gains, and then what happens next is none of my concern. Whenever we get there, what happens afterwards, I don't give a shit. I can spare a tiny amount of free leverage if I expect the market to go further below, but going in here, I'll take the gains, I reduce the leverage, and I'll take a nice gain, okay? So that's all I had to tell regarding this. Second option that is, and we need to watch for this very closely, is the fact that the market could be in a compression phase instead of a breakdown phase. So if this breakdown fails, and if for some reasons the market were to rise again, I'll have to reduce the leverage. So I'm just setting an invalidation level in here. As I'm leveraged, I need to put an invalidation. So that will still be a positive gain taking, but if the market retraces back to that resistance, I have to take the gains, reduce the leverage, because we'll be in another configuration. I'm going to tell you what this is. I thought we were in this divergent diagonal ending, and now we will be going there, ranging, breaking it down afterwards. But the other option is that we could be in a diamond reversal, Okay, so expansion, compression, and release. That's an option. So if for some reason that breakdown fails, means that we're ranging. Okay, as you can look at all those breakdowns, break up, breakdown, break up, breakdown, clearly says we're in a range. Divergent diagonal kind of range could be in a compression kind of range. And if this is the case, then if that breakdown isn't causing an acceleration in pricings, and instead of that a wrong footing pattern, really means that we're probably going to build a triangle. So in that perspective, okay, what I'll do is basically take some gains in here if we get to the apex once again, and obviously wait for the completion of that triangle and put that money back again when we confirm the selling breakdowns. Okay, so now I want to have confirmation that this market is definitely breaking down, which for now remains to be seen. JPN, I'm going to talk about this one. I think this one is not mature yet. I've been failing the breakout level, but for some reasons, lots of things suggesting that this is too early to go aggressive. We're clearly building a range. You can see we definitely are, because we have those two breakups, breakdown, failed breakdown, breakup, failed breakup. So the thing is that I suspect that this market might be ranging around that level. Okay, so you take that level, which is 23,000 approximately, big level. And as you can see, anytime we try to break it, it doesn't work, either bearish or bullish. So you need to know that this suggests the market is ranging. And generally, this level, the breakout level, is the middle level. It really looks like a flat range, okay, as you can see. I think we have a resistance in here, but I think the big short entry is going to be higher pricely. We can have better prices, okay? So consider this. What I do is I'll do this, okay? We're going to try taking that, okay, bottom to possible market top, in which I want the 50% to go there, okay? So 50% must be on the middle line, okay? So that highlights us that potential 25,600, okay? And regarding this, we're going to put the Fibonacci algorithm. And that, you can see, is really what's at play right now. I strongly think that this is not the market top. This is just an interesting selling signal, but we're probably going to have to go on chasing this one. So I think this is where the big game is, where the big short can be made with lots of confidence on that market. So I'm going to do this because this is definitely the price I'd like to sell, okay? And from what you can see, this is what I'll tell. Resistance, support, and we're going to probably last in here for a long time, okay? I expect us to do this, okay? Remaining under that bearish pressure, but remaining above that support, ranging that area for a little bit before reaching the confirmation and entering bearish market. Whenever we'll break this down is where the GPN will enter bear market validation, okay? But before we do this, we will terminate the bullish trends, range a bit, reverse to some more bearishness, which means we're going to trade the highest part of that range and then trade back in the lower areas and break down. So this is where we're going to go fully leveraged. This is where the market will forecast us to go bear market. But for now, and until then, I think the market is just trying to range. And in that range, to me, the structure looks like we definitely should put that as a mid-price area. And this is where the DOM zone is. So you don't want to trade the DOM zone, and we will be right in there. So as right now and until further notice, I really strongly suggest that you remain cautiously trading that market before heading to those pullbacks. And I still think that we're going to go there to long-term buying entries, which means in that area you sell, in that area you buy, and that makes a 40% drop. I mean, big correction, but not the end of the world, and the market will recover from this. And basically here, this is where you got the Black Friday. This is where you got the very interesting long-term prices to buy again the GPN. Okay, aside from this, now we go to the 10-year yields. I strongly think that in here as well we're building a range. Clearly we're not going to accelerate the trend in here, so I strongly suggest that we're going to fail near the 3.40 in terms of 10-year yielding. So near those areas we're going to have a range trading. Interesting to first buy the 10 years. If I buy the T-bonds and sell the 10-year yields in a first speculative range trading, so not a big amount of leverage, but probably a simple trade to go from resistance to support with a taking profit in between. But we'll talk about that later, so that scenario is still pending. I remain bullish on the 10-year yields in the euro area, but we're arranging that taking profit area before reaching to taking profit number 2. Talking about the goal, we're just trying to figure out what the shit we're going to do in here. We're just trying to figure out, I wouldn't put a stop loss in here, it would be really too dangerous, so we're going to set things really straight. To me, the context is purely and simply this. We're very likely going to be 76.4% retracement, and we can go there without a problem. So if you play putting a stop loss in here, you could just very well be stopped out for no reasons, but there's obviously a stop loss to set in that scenario, as we're in a taking profit structure. So that doesn't suggest the bulls are in control right now. All it says that the bears are getting more and more cautious. They're taking less risk that they've been taking by piling short positioning in that bearish trend. Now they are limiting the risk. They're taking some money off the table, but they still might want to go lower and try to fuck up the bears. And this is possible. I mean, if you just forecast this, okay, you take the taking profits, all right, you just do as you just anticipate where the sine wave target will be. You take the highest candle close on the previous cycle, and this is where I think this could be. Okay, highest candle close was there, and you report it to the downside. So more you can see, we can make a tiny, slightly lower low. So consider this: whenever we go there, you don't want to be stopped in that price area, because we could very well trade this. We can just fail in here and be bullish, but we could just go there and still be bullish as well, because we're in a taking profit area. So going in there is nothing bearish. It's just the bulls are not strong enough to hold the price in that area, but they will be there, because in here bears will be out. And the market can rise for 2 reasons, because the bull guys are strong, which I would like to see, because I think we should have strong support in the goal. But if we don't, I mean, if the bulls are not strong enough as I think they are, if I just wrong in here, I'll just be wrong in timing, but not wrong in this scenario, which means taking a stop loss in here might not be necessary, but a price adjustment, a risk adjustment might be necessary in that price area. So I'm watching closely what the price will do in here, and to see if I need to, for example, reduce the position sizing to just afford myself to get the price going there. But obviously, if we were to go in that price area, so $1,150 per ounce is really a great price to buy if we have any 2-hour chart bullish signals in that area. So you need to be aware of this. Bear this one in mind, as we do have a very weak resistance in here regarding the time we've been spending in here and had not a single momentum confirmation. We're also having a squeezing pattern, which means anytime we go there, bulls are in control, and then this is where they'll show the strength. So I'm waiting for this to happen, and until it doesn't happen, I'm fearing that the market could just try to go there. And if it goes 1150, then obviously upon bullish confirmation signals only, I'll be ready to put some money in there again, but not until then. So for now, squeezing pattern says you need to broaden the stop losses. The stop losses shouldn't be placed near the current prices, as we might expect some momentum to outburst, and it could very well be first in the wrong side and then in the good side. So you don't want to be stopped out stupidly because the market's volatile. So if you're too much in there and you can't afford a stop loss in here, say for example 1140, if you can't afford a stop in here, you just want to reduce the leverage. That's simply this. The goal in here is to assess the risk. We're speculating, which means we need to adjust the market conditions. Market conditions right now are not good, which means you need to be really cautious. Until we manage to validate, there is still a really huge risk for the price to go there, and if price goes there, you don't want to be stopped out. Same thing goes for silver. I'm still waiting for US dollar to trigger. But today we have to talk about euro dollars, a new scenario that will show up. I'm quickly going to talk about Apple first. So Apple has been rising again yesterday, bullish engulfing structure, blue triangle, which means in terms of cycles, the bulls are still really in control, even though the momentum is overstretched and showing some exit structure. We're kind of ranging, so as long as we don't break the highs, we're still searching for potential bearish entries by breaking down that support. But as long as the bulls are holding those supports, we just do nothing. Okay, so we need for the price to break down supports to validate the entry on that scenario, and the market will probably collapse afterwards. But as long as it doesn't, the momentum, as long as the momentum is trying to slow down the pace, we still have bullish cycles and people buying that shit. So let them do it. The higher they push the prices, the better the gain will be in the end. So wait is the only solution in here, but nothing new that you don't already know. So euro dollar, new scenario. I'll be watching closely. I'll be making first speculative entry right now. So this morning, we're buying that price. Invalidation is in here. If prices are going there, money management has to be readjusted. So probably reducing the position sizing or eventually exiting entirely. We'll see about that. Until we get there, there's nothing else to do than just buying the speculative entry. Sorry, we got a double bullish, so it's good. I was waiting for that daily signal to come. We do have it. I'm buying euro dollar, mostly because the DXY is showing some bearishness. So I'm buying euro dollar. The target is reaching out there to validate the trade and there to confirm and rising the number. So for now, it remains a 2-on-5, which means I have money in the table, but tiny amounts, speculative amounts, and if it goes wrong, I'm not going to lose that big. Okay? GBP USD, I'm still bullish on this one. Euro yen, I've been taking, as I said, partial profits, and now I'm waiting to see how the market behaves in that price area. Waiting for it to build a range and then break down that range will be the confirmation to go fully leveraged on that market. I've been reducing the numbers back to 3-on-5, and I'm currently duly exposed to that market, which means I've been reducing the leverage yesterday because I was over leveraged. You knew about it. I said I'm taking that risk. I did a good choice as the market has been pulled backing, but as the market has been pulled backing, I obviously need to reduce the leverage. Now I'm just waiting for the market to range that price area and trying to find new resistances, and whenever I'll have them breaking it down, I'll go to fully leveraged position, go back to 4-on-5, but for now it needs to remain cautious. NZD yen, remain bearish. USD yen, I remain bearish. USD CAD, I still for now don't trade this one. I'm waiting for the breakout entry. USD CNH is going to be a new scenario. This one I'm watching closely for it. Probably going to be raised 2-on-5, so probably a first speculative entry to come in the next few days. We're right into the red area. I'm waiting for a 2-hour chart signal to come forward. So we need for a 2-hour signal, which is for now not happening. So I'm waiting for this to come. So it's just a new scenario that I needed to talk about. So upon 2-hour chart signal only, this one can be a first speculative entry, but for now we still have nothing. USD CNH, still bearishly speculating on this one. Nothing happens. We're still 2-on-5 as we've been rising to the resistances instead of breaking supports. So instead of triggering the selling entry upon breakout, the market decided to go searching for resistances. So we could go there, which means remaining speculative is absolutely fucking necessary. Got a taking profit structure. The market is breaking it up, so no problem with that, but the bulls are exiting, and this is what I look forward for. So from now on, I'm trying to figure out what the range structures looks like, and it looks like I've been speculating a little bit too aggressively, but that's no problem. I still think those trades will provide gains, sorry. So I'm just basically patiently waiting for the price to find a market top and confirm a reversal. So this selling entry is not viable anymore, so I'm just waiting as we speak. to just have the confirmation of the profit taking pattern to be triggered. Okay, so for now we've got overstretched momentum. As you can see, the prices are not responding to this, so we're waiting for a red triangle to confirm, with obviously, and would be great to have a structure on momentum. So for now, momentum's not responding, price keeps on going, cycles are not respected anymore, but we're still into profit taking kind of trading, which means bulls in here are taking the gains, taking the money off the table, so we should have some pullbacks afterwards. It's just a matter of time. We're just trying to find the right timing in that market. So speculative, so 2 on 5, you know the deal. USD MXN as well, still speculative on this one. The market is retracing to the selling entry prices. The taking profit structure in here is still not validated by momentum, but the market needs to have catalysts to be bearish on dollar. I think we are, and it's just we're waiting for a reason to break down that support. So until it managed to do it, I'm just patiently waiting. Meaning I have the speculative entry with decent prices, waiting for the price to go reaching out for that breakout level, and that selling entry will be there to help me taking more a bigger position sizing on that selling breakout, because I'll have the security of that higher speculative pricing backing me up. Okay, this is the only reason why I'm doing speculation. It's not to play God. Obviously, if I did my speculation perfectly, I would have been having that price, which I don't. So I've been missing the speculative part in here, or not doing the best possible job. But still, I want to have speculative entry at higher prices than the breakouts, the breakdowns. So when they happen, I can put more leverage without taking risk. Okay, that's how it is. And then AUDNZD, you know about this one. Didn't manage to make the candle close as expected yesterday. So I've been rising the alert in here, and now we're probably going to have to range. Yesterday has been highlighted as overbought, which is a danger. As we're overbought, we're probably going to have to range that price area. Can I have another pullback once again? So we clearly don't want the market to break the support right now. And I would like to see the market ranging and breaking up above the overbought level. That will be a kind of a confirmation that the market is ready to go some bullishness. So as long as we're rising in here is good. As long as we don't make daily candle closes above the overbought structure, is still a market that hesitates and will need some catalysts to go higher. Okay, so we're kind of waiting in here to have some new informations. So this is the scenario I've been sharing to you guys yesterday. So we do have a very nice double bearish signal on the DXY. This is the reason why I've been going into euro-dollar speculative entry. So we have it suggesting that we might be right. To me, the consolidation really looks like a structure that we very well know. So going from this, we've been making ABC going all the way down. So it looks like ABC potential structure, and ABC going to the downside. So for now, I'm waiting for the market to go there. I'll secure the trade. I'm waiting for further informations, but clearly in that range structure, we could have some more bearishness. Other option is that we will be making a double XY. So once again, you don't try to anticipate what consolidation will look like. You have double bearish in the price area we were expecting to trade on, so you don't overthink things. You just take the damn fucking trade. Okay, we're expecting the market to go there, so you put the damn range. Okay, this is where you expect support to be. Okay, this is where the resistance is. Red area, signal, fucking taking the trade and not overthinking things. Okay, so I've got confirmation. We're triggering red area toward blue area to take some profit off the table. That's basically it. We've been covering everything today. So I'm going to leave you guys out there, as you haven't been putting questions yesterday. So I wish you guys good trade and see you tomorrow as well. Bye-bye.